This is Farouk from Actualize Digital Assets. There have been quite a lot of shockwaves in the last few days after President Trump rolled out those new tariffs. So today we'll chart where the markets are headed. We'll spotlight winners and losers, and we will craft a plan for your portfolio to protect it and grow it over the next 6 months. But before getting into it, I would greatly appreciate if you press the like button and share this show with someone who might be interested. It really would mean the world to us and would really help us grow and spread the word. So let's get started. So first, this is not a financial advice. So these are our recommendations based on the data that we have access to. So as you may know, so in the last few days there have been quite a lot of noise and quite a lot of shockwaves in the market. So President Trump dropped a tariff bombshell and basically imposing all imports a baseline of 10% in tariff and soaring up to 60% on China. So this is not just a ripple, it's a tidal wave dismantling decades of free trade. The World Trade Organization is fading, and protectionism is honestly maybe the new captain. So this traffic storm isn't just American, it's a global. Asia is reeling, Europe is bracing, and supply chain are not in up. Confidence is shaky, but amid this huge turbulence, there's an opportunity for all those who can spot it, who can see what's maybe coming in the future. So let's find this. Try to spot the might be are maybe shaping the future or shaping the next few months. So as you can see here, China have been imposed 10% on all its imports to the US. Mexico also 25%, and China and Canada also 25%. So these three countries are some of the main trade partners of the US, and this will affect many industries like agriculture, automotive industry, and technology. And so the industries that are the most affected by this, as you can see here in this modeling, so it's to be probably the automobile and component industry, the semiconductors by could be touched and affected by up to 29%, minus 29%. The auto industry and the components also might be affected by up to minus 32%. The technology, hardware, and equipment might also be affected by minus 25%. So you can see also other industries like banks, media, entertainment, consumer goods, transportation. So all these industries will probably get affected because they require trades from cross-border trades and cross-border transactions and goods, transfer of goods. So these industries will be affected the most. These are export-heavy industries, and they are tariff targets, especially in Asia. So if your portfolio is parked in some of these industries, maybe it's time to shift gears and look for other options. So still, not everything is sinking. Not all chips are sinking, and you can see that food and beverage are up 1.7%, and telecom is up 0.6%. So it's not huge, but still, compared to market in which indexes fell by 10 or 15% in some cases, that's quite good. So these essentials dodge the tariff bullets and are perfect anchors for your wealth. So next slide. Here you can see the countries that are under siege. So basically, the targets, the countries that would be the most affected by the GDP might get affected the most by tariffs. So as you can see here, Vietnam could get might get decline in GDP by minus 7.4%. Taiwan might get also get declined by 4.8%. So there's a risk for these countries. So China's exports will be slapped by 60% tariffs. This might drag Asia down, and these choppy waters really you have to steer clear unless you're a thrill seeker. So here's the twist. However, some countries that are not exposed to the US have less GDP risk, like Argentina, like Saudi Arabia, and this reliance makes them almost tariff proofs, at least for now. They're more tariff proof than other countries. So if you are planning to move your investments to other countries or invest in some other jurisdictions or countries, maybe it's good to consider these countries. So there's also Australia, Brazil that might not get affected that much. Canada, even though there have been a lot of reports that and predictions that the Canadian GDP might go down, so there's still probability that it might not get affected that much. Also, India also it's very likely that it might not get affected that much because it's not that much reliant on trade with the US, and also Russia, because they were not uh, imposed any tariffs, 0%. So that's a very good strong point for if you're planning to invest in some countries. Maybe these could be interesting countries. Also, Turkey, it's just minus 0.3% in GDP risk, which is really really good given the whole economic turmoil and shockwaves that are happening in the world today. So for next slide, uh, so and now we can think about maybe things that are maybe more unconventional. So crypto could be a lifeline in this environment because traditional markets are wobbling, and decentralized assets basically they sidestep tariff rules. You don't pay tariffs on crypto transactions. If you stock crypto, or you send crypto, or you invest in crypto, you don't pay any tariffs, which makes the crypto assets much more interesting and appealing in this new environment. So our crypto alpha portfolio can be a sleek hedge for turbulent time, but more on that later. I'll explain more and give more details. So here you can see also you can see how crypto could be a lifeline. So these charts are from April 1st, and you can see that the initial tariff shock took Bitcoin down compared to S&P 500, and you can see that also Bitcoin held ground for about 24 hours and then rallied back again to where it used to be 48 hours ago. So this is one of the reasons why we think that crypto is a strong asset in this new environment, and is probably one of the best assets in addition to real estate and also the industries that are not affected by the tariffs, or are less affected by the tariffs. So the question maybe it could be asked is why Bitcoin can outperform. So Bitcoin held firm so during this April shock because also as in its nature, Bitcoin is actually data information. So when sending information from one place to the other, you don't pay taxes and you don't pay any tariffs, and this is what makes it much more appealing and much more interesting. So our recommendation is that you allocate 15% to crypto. So it's not just a hedge; it's a growth engine in a fractured world. And you compare it with, as I said, with the resilient sectors for a portfolio that thrives maybe in this new age. So here you can see the some of the suppliers or some of the companies that might get the most affected is Nike, and the supply chain might might get a shakeup because Vietnam is one of the main countries in which Nike is manufacturing their goods. Indonesia also, China and Cambodia, and you can see that Nike will get affected a lot. That's why their stock went down, I think, by almost 10%. There are 460,000 workers in Vietnam that are manufacturing goods and components for Nike's products. In India, in Indonesia, it's 282,000. In China, it's 100,000. In Cambodia, it's 57,000. In India, it's 43,000. So you can see, for example, India, why it will not be affected that much by the tariffs war, because they don't have that much reliance on the U.S. economy. They have local trade partners like China, like Russia, like Iran, and maybe the Middle East, Africa also, so and Europe. So they're not really relying on or not that much relying on the US. So next slide. Here you can see that the new tariffs, how they're affecting the world. So you can see which countries will have the most will change the most their exports to the US. So you can see, for example, Mexico might increase their electrical exports to the US by up to 20%. So these are data from Bloomberg. And you can see that other countries like Canada for parts and for cars, Mexico also for cars and parts, maybe they might reduce their exports because of tariffs. Mexico machinery might increase their exports to the US. The rest of the world to be on average, stay on the average, obviously because it's the average of the rest of the world. But Vietnam, for example, the exports will decline by up to 50, down to maybe 15% because of the tariffs. So this is an overview of the market. So you can see these are some historic trends from past recessions, and as you can see, in 1987, there have been further decline in the markets. It went down to 35%. We don't know how the markets will go, how they will be headed, where they will be headed in the next few weeks or few months. But we know that which industries will be affected. We know which countries will be affected. So this will give you an idea about where maybe to reposition your portfolio and where you have to orient your allocations in the near term and maybe in the long term, because maybe these trends, these tariffs, maybe they won't change that much in the future, and maybe the US will hold to these tariffs unless other countries will give up and they will reduce their tariffs to 0%. So the US also will reciprocate with a 0%. So there's a lot of volatility here, but for now, the markets look. There's a possibility that there might be a decline, but there's also a possibility that the markets rally if there's there is no further escalation in the trade war, in the tariffs war. So last point. So as I mentioned, regarding our model portfolio. So this is our model portfolio, crypto portfolio. So this is a portfolio in crypto assets in which we do the allocation. So it's a passive portfolio in which we're not actively trading. We're just buying and holding into assets that we think will outperform the market, and we do the vetting, we do everything. And as you can see, our portfolio have outperformed the market over the last 5 years. It outperformed Bitcoin, and as you can see, we outperformed Bitcoin 93% of the time, which is quite good. And you can see here that even though there's a decline in our performance over the last 6 months, we are still not 6 months. Last 4 months, we are still above Bitcoin, or we're beating Bitcoin in terms of performance. So it's plus 770% over the last 4.5 years almost. and Bitcoins plus 390%. So these are assets that in which we are allocating. These are crypto assets in which we are allocating, and our portfolio is outperforming the market, outperforming Bitcoin, which is the best performing asset of the last decade. So this is by CNN. This is a finding by the CNN. So thank you very much. We'll have a live show maybe tomorrow. So if you like this format for our show, please like and share it with somebody who might be interested by our recaps are related to the economy. And thank you very much. And if you want to get more information about our investment product of our Alpha Crypto Alpha, you can have a look at our website, which is actualize.com/invest. And we'll get back to you very quickly. Just send us a message and we'll get back to you. Thank you very much. And see you soon in our next live stream. Bye bye.